Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Of course, just a few minutes to go before we go to the close. But yes, it has been a steady day throughout because if you look at Nifty, that has surged nearly 300 points as of now, and it's trading above that nearly that 25,600 mark as well. But it has cooled off from those levels. 25,600, it's back and below that 25,600 odd levels as of now. 25,582, that is where Nifty is at. Sensex is also off its day's high level as of now, up about by 340 points. India VIX has also continued to cool off by about 2% itself. But yes, coming to look at the broader end of the markets, mid caps and small caps, both of them have been exhibiting, a positive territory. And if you look at the mid caps, they're showcasing a gain of more than 0.5%. Small caps also showcasing a gain of about 0.4%. So yes, broader end of the markets, both of them looking good. However, if you look at the advanced decline ratio, the breadth of the markets is even Steven. If you look at declines, they have taken an upper hand. Advances are still taking a back start as of now. So yes, the breadth of the markets is something yet to recover as of now, despite the upbeat mood from the entire markets as well. But yes, we did see some good report that came in from Goldman Sachs today, where they have upgraded India to overweight from neutral, which is from last year itself. They've upgraded to India to an overweight stance, and they've said that Nifty can reach at about 29,000 mark by the end of December 2026 as well. What the analysts have said is that the earnings cuts have been materialized and tariff headwinds have been led to foreign de-risking, and the case for Indian equities is likely to perform in the coming year itself. So yes, that's a good report that came in from Goldman Sachs. They've also said that among some of the key sectoral themes, financials, consumer staples, defense and oil marketing companies are something that we need to bet on from here on, because they believe that the earnings shortfall, external headwinds and investor concerns which is related to AI has kind of impacted the investor sentiment going ahead. But yes, they believe that Indian equity markets are up by about 3% in dollar terms, and they have underperformed the emerging markets so far this year. And the underperformance was attributed to a mix of high valuations, cyclical growth and profit growth slowdown. And now they believe that some of the easing measures that is coming out from the RBI rate cuts, then we had the GST cuts, so that could aid the consolidation story of India's growth story in the coming years as well. And they believe from the earnings front, the EPS downgrade cycle has has lasted longer than the typical median cycle of 10 months and has stabilized over the last 3 months, and that could lead to upgrades in the select markets from here on as well. If you look at the past year also, foreign investors have sold about $30 billion worth of equities, and pushing the foreign ownership and the mutual fund allocations to the lowest in nearly 2 decades, and that is what they believe that could place Indian equities at a strong forefront in the upcoming years as well, given that the foreign equities have also been sold off in the Indian equity markets and the valuations still remain quite higher, but still we have corrected off the peak levels as of now. So that's a good report that came in from Goldman Sachs. But yes, coming into the sectoral performance, IT stocks definitely they have led the turbocharge ahead, and if you look at the metals and pharma stocks, they have also supported the bullish momentum in today's trading markets. If you look at the Nifty IT index, up and about by about 1.5%. If you look at metals and pharma, both of them, pharma especially is exhibiting gains of about 1% itself. Metals also more than 0.5% gains coming in from the metal index as well. But yes, stock specific action that continues given that we are in the last lap of the earnings season. So we did see that Bajaj Finance, it's doing well ahead of its second quarter announcement. We will be watching out for the results in just a couple of hours as well. Bajaj Finance, and of course the stock has also hit about its 52-week high, and that's what has also aided the sentiment for this NBFC giant as well. But yes, what did not do well, that was your Trent on the way down. It has been under pressure, and right now the stock has been exhibiting a decline of about 7.5%. We did see that the company has reported earnings which was a miss from the second quarter. It was miss from what the street was estimating as well. If you look at the revenue growth, that remains soft during the quarter. Net profit was impacted by the higher depreciation expenses, and that is what made the brokerages cautious for the counter as well. Several brokerages have also turned cautious, given that they believe that the soft growth momentum could lead into the valuation re-rating in the upcoming quarters as well. For instance, you had Citi that downgraded the stock to about sell. They have also sharply reduced the target price to about 43.50 rupees, and they believe that the overall consumption trends are expected to remain weak, and the aggressive expansion in tier 2, tier 3 cities could bring the growth rate down from the upcoming quarters as well. They've also cut its FY 26 to 28 revenue estimates by about 6 to 9%, EBITDA estimates by about 6 to 12%, and they've also lowered the target of about its EV EBITDA multiple to about 40 times as well. Goldman Sachs, they've also given out a neutral call on the counter, reduced the target price to about 49.20 rupees per share. They said that the operating EBIT growth of about 9% on a year-on-year basis, the second quarter, which was below expectations because the sales was impacted by the unseasonal rainfall, and consumers have been prioritizing on big-ticket purchases ever since the GST announcement has been announced by the finance minister as well. Now, Goldman has added that the company's automation investment is helping limit any profitability impact despite the weak like-for-like growth, though the margin benefits are likely to be absorbed in the base for the fourth quarter as well. On the other hand, apart from Goldman Sachs, Jefferies has also given out a hold call on the counter. They've reduced the price target to about 5,000 rupees and believe that the revenue growth has decelerated to about 17%, marking a multi-quarter low. And that is why you can see that the stock of Trent has been punished in today's trading session, 7.5% cut coming in for Trent as well. But yes, stock-specific action continues. Let's take a look at some of the top Nifty gainers and losers. And on the other hand, Infosys, HCL Tech, some of the IT stocks have been doing well. Of course, if you look at the global markets, they have been cheering given that the Senate has begun voting on opening up the US shutdown, which has been closed for about 40 days as of now as well. But yes, once Senate approves the bill, it is going to go to the House of Representatives, and then it's going to go to President Donald Trump for the final bill to be amended so that it gets approved by next year as well. But yes, for now, the markets seem to be on a cheerful mode. If you look at in the morning, the global cues were quite positive, and that is why majority of the IT stocks have been doing well on improved sentiment from the US markets. So Infosys, HCL Tech doing well, 2.5% gains coming in from there. Bajaj Finance ahead of its Q2 results, like I was talking about, 1.5% gains coming in from there as well. Grasim also doing well with about 1.5% gains. Second day of consecutive gains coming in for Grasim. Wipro also doing well with about 1.5% gains as well. On the other hand, if you look at the way down, Trent, like I talked about, 7.5% cut coming in for Trent. Max Healthcare also not doing well with about 3% cut. Tata Consumer Products with about 2.2% cuts. Of course, it's down for the second consecutive day. Apollo Hospitals also not doing well with about 1.5% cut. Power Grid and Eternal, some of the other losers on the other hand for the Nifty 50 as well. So all in all, it looks like the breadth of the markets continues to remain weak. But yes, let's take a look at some of the mid-cap gainers on the other hand. Ola Electric has been doing quite well. 5% gains coming in for the counter. Whirlpool is also doing well at this point of time with about 4% gains. Fortis Health doing well with about 2.5% gains. So some of the volume movers have been doing well, quite well at this point of time. But yes, today we had a major listing by the Lenskart. Of course, the stock did debut the bosses at a discount, and the stock did see a fall of about 10% or so. But yes, the stock right now has recovered from those levels, seeing a gain of about 3.5% as of now. 403, that is where Lenskart has been trading as of now. But yes, we'll be watching out for Grow as well, given that the IPO was did see a good subscription numbers during the bidding process. And of course, we'll be watching out for another IPO as well to get listed in the markets as well. So yes, this is happening from the markets front. But yes, let's try to understand more about the last minutes of the trade and how you should be positioned as well. I'll quickly go across to Milan Vaishnav, which is founder and technical analyst of Chart Wizard FZE. All right, he's not here as of now, but all right, we'll take some of the other stocks in focus as of now. But yes, like I was talking about Bajaj Finance, the NBFC giant is likely to report its second quarter results as of now. We'll be watching out for its FY26 guidance. But yes, the stock has been trading higher. It is near its highest level in this year as well, ahead of its September quarter results. But yes, we are expecting that the net interest income is likely to grow in double digits as well from last year. Profit is also expected to grow in double digits. Provisions are likely to increase on a sequential basis, while asset quality and NIMs, that is expected to remain also on the positive foot as well. If you look at the business update that came in for Bajaj Finance, that had been quite positive because their customer franchise stood at about 110 million compared to 92 million last year, and the customer franchise in the September quarter had also increased by about 4.13 million as well. New loans also booked during the quarter was up by about 26% on a year-on-year basis, and OM also grew by about 24% on a year-on-year basis. So yes, all in all, Bajaj Finance doing well ahead of its second quarter results. Let's also shift focus and talk about Nykaa, because that stock also did well in today's trading session. The share is near its 52 high levels. It's seeing a good response to its second quarter performance as well. If you look at number wise how Nykaa has fared, the net revenue has has been in mid-20s for the 12th quarter in a row. Company's gross margins have been in the highest level in the last 12 quarters. So yes, it's a positive front coming in for Nykaa as well. Earlier we did see other platform companies also doing well. Swiggy came out with its second quarter results, which the street had appreciated. Zomato came out, but the street was a little bit concerned on Zomato's second quarter performance. But today Nykaa has been well appreciated, and today the stock has been exhibiting about 6% gains as well. If you look at the EBITDA margin, that has grown up to about 6.8% from 5.5% of last year, and brokerages have remained largely positive on the counter. If you look at Morgan Stanley, they have maintained an overweight call on the counter, given out a price target of about 271 rupees per share, and they've highlighted that the company has been quite confident in maintaining its business growth momentum across both of its businesses as well. Morgan Stanley also expects that Nykaa's beauty business performance is expected to be strong in the third quarter, which is aided by the Nykaa land and sale as well. On the other hand, if you look at another brokerage firm, that is your CLSA, they have given out an outperform call on the counter, and they have shared a target price of about 298 rupees per share, and they've raised the EPS estimates for Nykaa as well by about 2 to 3%. So that's a positive cue coming in for Nykaa as well. So out of 25 analysts, 12 already have a buy rating on Nykaa, and that's a positive thing that is coming in for Nykaa as well. But yes, let's quickly shift focus and talk about sugar stocks as well, given that the government has also approved extra export quota for the sugar companies. That is why you can see the likes of Balrampur Chini, Dwarikesh Sugar, they have been trading well in today's trading session. Dhampur Sugar has also been trading well in response to the government sharing some updates with regards to the sugar exports as well. But what the Food Ministry has approved, that is, they have allowed the export of about 1.5 million tons of sugar for 2025 to 2026 sugar season. And remember that October month is the beginning of the sugar season as well, and that is why we can see majority of the sugar stocks also doing well in today's trading session. Apart from that, the Food Ministry has also removed the 50% export duty on molasses, which is another byproduct of sugar production as well, and the move is expected to help the sugar mills improve liquidity and also pay the sugarcane farmers quite faster, and that is why you can see majority of the sugar companies doing well as well. Apart from that, we did see earlier in the year that the government has also removed majority of the ethanol curbs production, which is why is also aiding majority of the sugar stocks in today's trading session as well. So all in all of these companies, that is helping the bullish momentum in the market. But yes, given that we have been talking about the earnings season, while some stocks did well, some stocks have also been punished. Like earlier we were talking about Trent. Let's now shift focus to Shipping Corporation as well, because the stock did see a decline of about 8% after its week's second quarter performance. Of course, it was a miss from across metrics, be it like top line or bottom line. Both of them fell in the second quarter. If you look at the revenue, that declined by about 8% on a year-on-year basis. Net profit had declined by about 1/3. That is a 35% fall from a year-on-year basis, and EBITDA also fell by about 24% on a year-on-year basis as well. So yes, all in all, if you look at Shipping Corporation, it did not do well in the second quarter. But yes, if you look at the other metrics for Shipping Corporation, what the company has done during the second quarter, they have said that they have inducted 2 large gas carriers, which is your Shahadri and Shivalik, into its fleet to strengthen its presence in the energy and transport vessel as well. But yes, from a revenue front, all the segments, be it your linear, bulk or tanker segment, all of them fell from a year-on-year perspective. But yes, coming to the closing rates of where the markets stand as of now, let's take a quick check. If you look at Sensex, it's still up by about nearly 300 points. But yes, looks like it's still off its day's high level as of now. Nifty is also up by about 75 points as of now. But yes, it is still off its day's high level as of now. But just 20 seconds to go before we actually hit the benchmark levels as of now. But yes, if we look at from a sectoral perspective, it has been the day for the IT stocks. If you look at the majority of the Nifty 50 gainers, HCL Tech, Infosys, all of them have been dominating the Nifty 50 gainers list as of now. So yes, it is the Nifty IT which is exhibiting a gain of about 1.5%. Other than that, if you look at Nifty Pharma Index, that is also exhibiting gain of about 1% or so. Bank Nifty is also exhibiting gains of about 0.1%. Other than that, you can see Nifty closing with about above that 25,575 mark. 0.3% gains coming in for the Nifty. Broader end of the markets have also ended in the positive territory. So all the 3 days losses have been snapped as of now. So Nifty Midcap exhibiting gain of about 0.4%. Sensex also exhibiting gain of about 0.3% as of now. If you look at the top gainers and losers on the Nifty 50, let's take a quick check of that. Infosys with about 2% gains. HCL Tech with about 1.5% gains. Bajaj Finance doing well ahead of its second quarter performance. Wipro with about 1.5% gains. Grasim and Asian Paint, some of the other gainers on the Nifty 50. However, on the losing end, Trent, that is where you can see the weakness to be. 7% drop coming in for the counter after brokerages have remained cautious after its second quarter performance. Max Healthcare also showcasing a decline of about 3%. Tata Consumer Products with about 2% decline. Second day of losses coming in for Tata Consumer Products. Power Grid also showcasing a decline of about 1%. And Apollo Hospital also one of the top Nifty gainers as well. But yes, let's quickly go across to understand how the market looks like for the long term and how you should build your portfolios. Let's quickly go across to Gaurang Shah, Senior Vice President at Geojit Financial Services. Gaurang, good afternoon. I mean, how do you make sense of the current markets? I mean, we do have Goldman Sachs upgrading India after last year. And while they still believe that valuations still aren't cheap, but earnings recovery could be possible from here on. What are your thoughts?
Thank you so much for having me on the show. Good afternoon to all the viewers and to you. A small disclosure that recommendations on this show are a part of our research team recommendations. Our company Geojit or we do not have any personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have investment interest. So I think it is only positive to hear from the global arena that credit rating agencies are incrementally becoming positive. We heard that some time ago from S&P, we heard some time ago from Fitch, and now we are hearing this. And the best part about India is that while the world is struggling with inflation, GDP growth, interest rate cuts, India has done this quite some time back and we continue to do that. So I think markets, basically, I think we went up 26,100, then we corrected, we went below 25,400 if I'm not mistaken. And then we conquered 25,600 and then we closed a tag below that. So I think it's going to be a range-bound trade for this entire week is what we guess. Unless we take out 25,650 decisively on the closing basis on Nifty spot, the range remains very, very tight on the lower side, 25,400 or 25,500 on the lower side, 25,600, a tag above that on the higher side. But the sense is that possibly we are making a base building exercise. We are trying to make a strong foundation so that we are able to withstand the next move up as we go forward.
To other AI-focused markets. But what do you think India would benefit once this bubble busts, given how the street has been concerned about it?
Well, I think, there is a lot of noise, to be very honest, and a lot of expectation. And I don't think that it is, look, long term, it all depends upon what the intricacies are and how much of negative impact has it created. We saw some time back stocks associated with this sector in the US corrected anywhere between 6, 7 to 10%. So my sense is that we will possibly get impacted, but we'll be the least one and we'll be the first ones to recover.
All right, all right. But amidst this, how do you see Indian IT poised for the second half amidst this entire AI related news flow? Because we earlier did see TCS announcing some plans for related to AI, and then we had others also following up on the same AI related news flow. So at this juncture, do you believe that Indian IT is still poised for a better second half?
So I would say it is still work in progress. Look, we are not there the way US and China are there. So it is still work in progress. I think it will take some time for the Indian IT companies. And most importantly, let's face it, I think the numbers for the second quarter for the Indian IT companies, where the expectation was absolutely negative, they came out with some decent color and shade, barring, of course, one company, Wipro. Rest all, I think, mid cap, small cap, large cap, all have delivered better than expected earnings. And after the earnings, the commentary from most of the companies was that yes, AI is something that they have to work upon. They are spending, they are employing, and they're increasing the headcount. Uh, I would again say in US there is a lot of expectation, and I think somewhere that expectation is going to uh, get negatively impacted in case if the companies are not able to deliver on the earnings front. Remember one thing: earnings is something that any country, any stock market follows, and any company follows. So if you have to stay afloat, you have to deliver, and if you are not able to deliver, you have to perish.
Okay, okay. But now that we are almost in the last lap of the earnings season, Gaurang, so how would you envision the upcoming quarters to be? Do you still see double-digit growth visibility for the second half?
So second quarter was very much a surprise, isn't it? Because a lot of people had, written down the second quarter earnings as a disappointment or a disaster. Fast forward to the current situation, I think we've just come, we are almost curtain downs on the Q2 earnings season, and we've seen a decent amount of upgrade. Disappointment, if any, was very few and on a very small scale. Scope of improvement, third quarter, fourth quarter, definitely yes. A larger scope of improvement in the next financial year, a big yes. And I think sector specific, you need to follow the theme as far as investment goes.
Okay, okay. But any sectors that you would point out that you find some growth visibility and valuations are comfortable from here on?
So we've listed down some, even for the second quarter, to be very honest, we had listed down some 6 or 7 odd sectors. I will name them for the benefit of your viewers. Uh, BFFI segment, extremely positive. So your public sector bank, your private sector bank, strong NBFCs. I think Bajaj Finance is going to deliver number today, if I'm not mistaken. And that's going to be a good shade also. So the entire banking and finance, BFSI segment, defense, cap goods engineering, power, capital market related stocks, autos and consumption, both discretionary and non-discretionary. So that's the broad, some 6, 7 sectors. And my humble request to all the viewers is that look at large cap first and then select mid caps. Avoid small caps because there is a trap.
Okay, okay. But Gaurang, we have seen the smart comeback for the PSU banks in the past 2 months as well. Do you believe that the much of the news-driven flow, be it your FI limit hike, the potential FI limit hike, or even the speculation of credit growth expansion has already been baked in, or do you still find the valuation supportive of getting re-rated ahead?
So my sense is that we are at a very nasal stage of credit growth and credit demand. And along with that, please do not forget that the asset quality for public sector bank and private sector bank has been improving. So while your public sector bank index has made an all-time high, your State Bank of India, I think Indian Bank, Bank of Baroda, all these three names in the public sector universe made a new lifetime high, if I'm not mistaken. And the story continues. There is also news from the government that they are further thinking of consolidation of smaller public sector banks into larger ones. So that's going to be a big cleanup act. And I think the like we saw earlier times, when the going gets tough, the tough gets going. So I think public sector banks, and more importantly, one more point I want to make is the difference, the gap between the private sector bank and public sector bank has now started to narrow down because of the performance.
Okay. Gaurang, I'll bring your focus to sugar stocks today because they did well on the back of government approving the export quota. But how you're placed on this sector? Because earlier we did see government also removing some of the curbs related to ethanol.
See, the problem is that more than credible, fundamental, the sugar sector runs on or rallies or corrects on government policies. Now, that's the sad part of it, whether you like it or not. So, when couple of years back they had put a ban, all these stocks were down and out. This year, the crop of sugarcane is at a record high, and that is one of the reasons why, again, the government has allowed up to a certain limit for exports of sugar. Along with that, ethanol blending was also a big theme. Ethanol prices per liter has gone up, but the blending did not happen at the expected level which the government wanted. So we don't have any specific coverage, to be very honest, on any of the sugar stocks. My only request is that just be a little bit careful, because whenever there are government policy related interference in a particular sector, you need to be a little bit cautious.
Okay. Gaurang, you earlier were talking about the discretionary space that you're quite bullish on, but I want to understand from the staples front. I mean, what is your view over there? Because we've seen that that plenty of the staple companies, they have reported a mixed set of second quarter performance. So how does the second half look like for them?
So again, demand, consumption, whether it is discretionary, non-discretionary, spending power, uh, all this is going to translate into a lot of positivity. Uh, Look, whatever happened in form of GST 2.0, there is a lot of noise on the street that from implemented on 22nd of September, and people wanted 23rd of September companies to report stellar set of numbers. Autos did that because that was a pent up demand of almost about 40 plus odd days. But at a ground level, we at Geojit believe that discretionary and non-discretionary, both staples also, I think you will see attraction. Though, I mean, this year I don't have the exact number, but the power consumption has been on a steady rise. Of course, in winter you will not consume that much of power, but I think summers and other seasons you will definitely consume power. Consumer durable is the other space where we are extremely positive on. Names like Blue Star, Voltas, Havels. In the non-discretionary space, we are positive on names like Tata Consumer, Godrej Consumer, HUL, ITC. In the utility space, we are extremely positive on cement. And by the way, the sector did deliver a decent set of numbers. And in fact, in some cases, there was better than expected numbers as far as cement. So all these utilities, etc., will start doing well. It's only a period of what is your time horizon when you start investing in all this.
Okay, all right. Gaurang, I'll bring your focus to Lenskart IPO once again. I mean, despite the 20 times subscription that we saw, again, it did fail to take off on the street today. So does this bring back the argument of valuation concerns and that, good businesses also can fail due to bad pricing?
This is the sad part. And I think since that time, I think it's almost about, a fortnight or so that there is a lot of noise as far as the social media is concerned. In terms of, look, we did not cover the IPO, so I won't give you a buy, sell and hold on the Lenskart IPO, but I'll give you our view, my personal view. It was expensive at 402. There is no doubt about it. People saw the kind of subscription it got and the excitement went to the next level. And the result, what we saw today, is in front of us. So my humble request is that please do your homework and then invest in IPOs. Not all IPOs will give you 50, 60, 70% listing premium. Some IPOs, despite of the stellar subscription, cannot perform. Like, for example, Lenskart. And look, Lenskart is the sector that Lenskart belongs to. There is a huge unorganized competition. So one has to take that into consideration as well. So let us see how the earnings are, of course, but it was very richly valued.
Okay. But, Gaurang, how would you draw its parallel to some of the other high-profile listings? Because if you look at Nykaa, it's still trading below its 40 to 45% below its, higher levels. And if you look at LG Electronics, Hyundai Motors, they have recovered from their levels as well. If you look at Hyundai Motors particularly, they've staged a smart recovery, giving out the view that some sustenance of the same could be measured from investors' point of view.
Oh, in that case, even Paytm recovered, isn't it? I think it was 350 low after that RBI news came through. So, this is that's what exactly I was trying to say. That look at the business model, look at the competition, look at the valuation, look at the management, and then decide whether you want to invest. So there are IPOs which can, LIC, for example, it has hardly gone above the IPO price. It has more or less stayed below that particular. But the insurance business is such, it takes time for people to get their wisdom and get themselves insured with a decent sum assured. And then your premium starts ringing in because the outgo is at a higher side. So I would again reiterate what I said, that look at the business model, look at the competition, look at the valuation, look at the management, look at the market share, and then decide. So there are IPOs which have gone up and then corrected. There are IPOs which have opened up at a discount and stayed there for a long time and then recovered. So business is something that's going to, products and services is something that will decide the future or the fate of that particular IPO.
Okay. But from a platform company's point of view, anything that you're liking from the space, be it your food delivery or even for a beauty or retail space from that front?
So Nykaa, I think you're referring to Nykaa, if I'm not mistaken. It did
Yes.
deliver 2-3 sets of decent quarters. Our expectation is that there should be good times ahead. Eternal, which was earlier known as Zomato, we have positive coverage over there. Paytm, Policy Bazaar are the other two names in the new age technology sector that we are positive.
Okay. And let's come back to the earnings front once again. I mean, anything that you are retaining your cautious view on as of now? Because you did mention a slew of sectors that you are positive on after the second quarter results.
So cautious with a caveat that the recovery will come, but it will take time. So there are two sectors. Of course, metals did well today. Indalco, Nalco, etc. delivered still a set of numbers. But metals is still stuck with the global news flow and its impact. The second one is the chemicals sector, which has not done really much, barring one or two names here and there. So these are the two sectors on which we remain a little bit cautious from the immediate short to medium term point of view.
Okay. All right. Just one last question before we let you go, Gaurang. I mean, what is the next big trigger that you're watching out for the markets? Because we've had the trade deal, which is still an overhang. But if you look at from a global perspective, the Fed has already hinted at a pause for the December rate cut.
So this was going to happen, isn't it? With the kind of situation and the data that is coming out from US, somewhere he had to take a pause, and he's decided in his own wisdom. So it's good. India, what's the next big trigger? I think the next big trigger is going to be in form of the free trade agreement. We all know there is great development happened between India and New Zealand. There is further development happened between India and European Union. With 4 European countries, we have already signed a trade deal. There is a Supreme Court case hearing for the decision made by American President Mr. Trump on the tariff front, and that's been fought out in the Supreme Court. Outcome from there would be a positive impact in case if there is something in terms of redoing that entire tariff implementation, etc. But that will again put a big burden on the Trump administration because of the refunds that they will have to do. On the domestic front, I think the participation is going to improve. We heard some 10 lakh DP accounts have been opened up. That's a big positive. So I think domestic data points is something that we'll be definitely looking out for more than the international news flows, I think. And of course, very soon we'll be talking about expectation from budget. You also mentioned about it. So I think all this will possibly give us a good sense of a decent upside after a brief period of consolidation.
That's right. Okay. All right, Gaurang, with that, we have to let you go. But thank you so much for your time and connecting with us.
Thank you. Always a pleasure. Thank you.
All right, that's all we have for this edition of Closing Bell. But yes, more results reaction will be on the way. We have Asian Paints, which is due a day after tomorrow as well. And more earnings reaction will be on the way. Bajaj Finance in just a couple of minutes will be reporting its second quarter performance as well. We'll be watching out how the brokerages reacted tomorrow morning as well. But yes, before I let you go, let me introduce you once again to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Moneycontrol app today and subscribe to Super Pro.